Hello, everyone, and welcome to today's session Preventing Online Payment Fraud Regulations and Verification Solutions. As one of the fastest growing areas of fraud, online payment fraud is expected to exceed 343 billion in merchant losses globally between 2023 and 2027 per Juniper Research. To put this into perspective, 83% of all countries have a lower gross domestic product GDP than this figure. According to NACHA, the ACH network governing body, ACH originators of web debit entries are, in quote, in the best position to detect and prevent fraud related to payments they are initiating. But in recent risk events perpetrated via social media channels, it has become apparent that some ACH originators do not have or use any such system to screen web debits. As a result, new regulations are emerging across the US requiring the use of fraudulent transaction detection systems to screen web debits for fraud. During this webinar, our speakers will highlight some of these new regulations and provide an overview of the types of solutions available for bank account verification, including consumer permissioned, data driven, and micro deposit options. We will also introduce our newest solution, Socure Account Intelligence, and cover its capabilities and competitive differentiators. Now, before we dive in, let me introduce our speakers. First, we have Eric Woodward. Eric is a financial technology executive passionately focused on transforming consumers' financial lives through innovative digital identity, authentication, and payment solutions. Eric spent the last decade helping the largest banks in the US create Zelle, and he has spent over 25 years leading, advising, investing, and partnering with financial technology companies. He is the author of 9 patents related to digital identity and payments and sits on a half dozen advisory boards for fintech companies. Welcome.
Thanks, Emma.
Next, we have Kevin Kupiak. Kevin joined Socure in 2021 from Capital One to lead the build-out of new initiatives focused on payment risk and first-party fraud. Over that time, his scope has grown to include responsibilities for our document verification product line as well. Prior to Socure, Kevin spent 7 of his last 10 years working for Capital One, most recently on the US card fraud team. He pioneered Capital One's mindset shift from viewing fraud mitigation as an operations function to recognizing it as a core strategic lever for the organization's growth. Thank you both for joining.
Thank you, Emma.
During today's session, if you have any questions, please feel free to add them in the Q&A tab on the side of your screen, and we will save some time at the end to address them. All right, let's go ahead and jump in. Eric, let's start with you. Can you set the stage around payment risk, especially as it relates to ACH transfers and money movement? Why is it being talked about so much right now?
Yeah, thanks, Emma. And great to have this discussion with everyone. Thanks to the rise of online payment processing, open banking, peer-to-peer payment options like Zelle, Venmo, and Cash App, more payments are happening digitally these days. In fact, according to Business Insider, paper checks are expected to be extinct by 2026. Wouldn't that be great? Given this environment, financial institutions need to assess the trustworthiness of bank accounts and determine payment return risk before payments are made. Before initiating a transfer or dispersing funds to an account, it's important to establish that the account exists and that the individual is authorized to transact on the account. This helps ensure payments are being made to and from the correct account. Customers expect funds to be made available immediately, but given the non-real-time nature of ACH transactions, funds could take up to 5 days, sometimes even more, before being released to a customer. And ACH returns can take up to 2 months. Understanding the likelihood that a payment will return allows an institution to expedite funds availability.
Thank you. So, Kevin, we've begun to see some new regulations pop up around this topic as not just web debit rule in the US, as well as propositions for similar legislation in the EU. Can you tell us more about these regulations and the options that executives at financial institutions have to adhere to them?
Yeah, absolutely. It's been interesting to watch regulation evolve in this space over the past couple of years, both domestically and abroad. We really first started seeing material change here in the US in reaction to this growth in fraud and scams when NACHA introduced their account validation rule, which, while written several years ago, finally took effect early last year. The rule requires the use of commercially reasonable fraudulent transaction detection systems for first use consumer accounts prior to initiating an ACH web debit transaction. When you read this language, it is quite vague, but at the same time, it's the first that we've seen such fraud controls being required by NACHA. I think it's a space that as we watch it, as we see how institutions react to the introduction of the new rule, there will be different interpretations and different options we'll talk about in a way to address this new NACHA requirement. But not only are we seeing this at NACHA, we're also seeing changes at the state level. Pennsylvania amended their fiscal code in July of last year to protect state electronic funds payments and collections against fraud and error. As we think about a lot of what the country saw as part of COVID and some of the abuse of these federal and state level programs, we're starting to see some changes in the way that states are thinking about the risk associated with making these payments. For Pennsylvania specifically, this change directs all Commonwealth departments, agencies, boards, and commissions for which the Pennsylvania Treasurer is making payment disbursements to first obtain electronic payment security services, otherwise known as account validation, prior to making those disbursements. But again, it's not just domestically where we're seeing these rules. In many ways, Europe is ahead of the United States in a move towards open banking. And with open banking comes more of a move towards real-time payments. And the European Commission released a draft regulation in the fourth quarter of last year that will require providers to check the match between the account number and the name of the beneficiary before these new instant payments are made, really to warn the payer about any detected discrepancies and ultimately prevent fraud that might occur. As I mentioned earlier, as we think about this NACHA rule, as we think about the different approaches to take to address this growth in fraud and scams and really validate ownership of an account, there's a few different options that institutions have available. Options fall into three main categories, which I'll introduce quickly and then kick things over to Eric. The first being consumer permission solutions, the second being data-driven solutions, and then finally, legacy non-real-time solutions. And with that, hand it back over to Eric.
Yeah, thanks, Kevin. So let's just talk about each of those different solutions. A consumer permission solution in our vernacular is one in which a consumer grants explicit consent to an organization to access their account and obtain needed data, typically by providing their login credentials. In a data-driven solution, an originator compares a consumer's account, routing number, and any shared PII against a third-party database. And a non-real-time solution would include things like microdeposits or a $0 payment or voided check to verify a bank account, which usually can take quite a while, sometimes days. So none of the options are specifically bad per se, but they just accommodate different preferences around cost, accuracy, timeliness, and customer experience. Consumer permission solutions tend to be secure and accurate, yet costly, and obviously requires some customer friction in terms of sharing user credentials and logging into an account. Whereas data-driven solutions are more affordable, have little friction, but are also limited to the data sources available. And microdeposits tend to be the waterfall method when nothing else works and you still want to get that understanding of whether or not a person controls the account and you're willing to wait a couple of days, then of course you can verify it that way. Back to you, Emma.
Awesome. Thanks, Eric. Now, Kevin, Socure has recently entered the payment risk space with its newest product, Socure Account Intelligence. Why did Socure make this move, and in which category does Account Intelligence fall?
Yeah, great question, Emma. Socure's suite of fraud and identity products on the ID Plus platform historically covered every step of the consumer journey with the exception of that last phase, money movement. When you think about a consumer opening an account, what is the first thing they need to do? Deposit funds in order to use it. When somebody opens a new credit card, what is one of the first actions they must take? Make a payment on their account. But now with Account Intelligence, that suite of products available through the ID Plus platform now covers that entire customer journey, from the moment of application being submission through money movement, whether bringing money into the account or making that first payment. As Emma mentioned, the launch of Account Intelligence marks our entrance into the payment risk space and unlocks multiple new use cases for Socure, including new account funding, funds transfer between existing accounts, loan repayments, government benefits disbursements, insurance payouts, and many more. Account Intelligence falls into that data-driven category that Eric mentioned previously. It allows customers to instantly verify domestic bank account status and ownership prior to initiating those ACH payment transactions or dispersing funds. The solution takes inputs of routing and account numbers, the consumer's name, and additional PII as optional inputs, then validates them against data sources and using advanced analytics. The product then returns a confirmation as to whether the consumer owns the account, and validation of the account is open, all in real time. And again, this is in addition to the ID Plus platform, all integrated to the single Socure API.
Wonderful. Eric, would you mind expanding further on what differentiates this solution compared to the other options you shared previously?
Sure. Yeah, there's a lot that makes Socure's account intelligence, or SAI, if you're like acronyms, unique. And I'll highlight three key differentiators. First, the solution is integrated into Socure's ID Plus platform. So for Socure's existing thousands of customers, you already have access to the company's full fraud solution suite with a single API. And this is just another module that you can call. Secondly, we filter and enhance the front end data for pinpoint accuracy. Some of the challenges come in terms of what PI is shared and whether or not the name matching is actually going to work. And because Socure's core competency is really around are you who you say you are and understanding all of the PI that goes with it, we're able to leverage that to make a much better matching algorithm on the front end. And then thirdly, we also incorporate data from many different industries. So it enables us to identify thin file or new to country consumers that are easily missed by legacy providers. So SAI not only streamlines the customer experience, but it also reduces operational costs for our customers.
Great. Awesome. So I know last year Socure was identified as a NACHA preferred partner. Our account intelligence solution and flagship ID Plus suite of products earned the company's title as NACHA preferred partner in the categories of risk and fraud prevention as well as compliance, recognizing Socure as a leading vendor of innovative and strategic solutions for the ACH network. Kevin, is there anything you'd like to add before we open it up for questions?
Yeah, absolutely. I'd encourage any user of the ACH networks and really anybody engaging in money transfers to consider both consumer permissioned and data-driven solutions in their quest to both adhere to new regulations, such as this new NACHA web debit rule, while also offering consumers their preference in terms of account validation method. The ultimate goal is to provide the best consumer experience, the best account ownership coverage at the best price.
Awesome. So before we go into Q&A, which we're going to put up a poll here. It looks like the question is, which of these account validation improvements are most important for you for 2023? You can select all that apply. Corey, on the back end, will you go ahead and put that poll up for everyone to see? All right, we'll give you a few seconds to answer that. Okay. Awesome. So let's see here. We've got a couple questions coming in. And let's also go over the poll results. Do we have the poll results? All right. Looks like we're having a little bit of technical difficulty, so we'll get to those after we go through some of these questions. So our first question here, this one I think is for Kevin. We'll have you answer this one. Precisely how and which type of fraud can this technology help prevent?
Yeah, it's a great question, Emma. I think it's also helpful to think about the value of a solution such as Socure Account Intelligence beyond preventing fraud. And I think first touching on some of the operational impacts it can have. Socure Account Intelligence is really two solutions in one, aiming at reducing the likelihood of receiving return payments for both insufficient funds, for accounts that do not exist. There are also instances where there's truly fraud and somebody's pulling funds out of an account that is not theirs. When I think about the value there, it goes beyond, but the value goes well beyond stopping fraud itself, and also has some pretty high operational implications as well as benefits to consumers. On the operational side, a return payment is quite expensive. It also means that the funds likely, in the case of disbursements, the funds are not getting to the person they are meant to go to. If you think about a unemployment use case, think about somebody inputting the wrong account number and routing number. Their unemployment funds are not making it to them, and it can take quite a while in order for that issue to be corrected. And so when we think about the value of a solution like Socure Account Intelligence, There are certainly the fraud implications and talk about a couple different scenarios there, but there's also some kind of back office operational cost savings along with the consumer and user experience side as well. Again, the account status aspect of this solution checks to help prevent payments from returning by ensuring the account exists and is open. And the account ownership check can further help prevent payment return risk associated with potential fraudulent activities. Imagine a bad actor taking a victim's account number and routing number off their check, then attempting to use the victim's bank account to auto-pay their credit card bill, utility bill, or to transfer funds from the victim's account into their own. This ownership check gives visibility to the fact that the bad actor is taking money from the victim's account to fund their own account and or pay the bills. The situation prevents a higher likelihood of payment returns, some of which can take 60, 90 days to return, and thus putting additional friction in place to ensure those funds are coming from the appropriate account.
Great. Awesome. Thank you, Kevin. So I'll pitch this one to Eric. I know synthetic identity fraud is huge, so I'm not surprised we got this question. Could account intelligence play a role in blocking the use of synthetic accounts?
Yeah, Socure's account intelligence doesn't explicitly perform identity verification checks needed for synthetic fraud detection. However, the solution's integrated into Socure's ID Plus fraud solution suite, which offers access to Sigma synthetic fraud via the single API. And that solution or that module is specifically designed to combat synthetic fraud. And so it is one of the exciting parts about having SAI integrated into the Socure ID Plus platform, because you can start off by asking the question, is this a real person or is it a synthetic identity? And then once you establish it's a real person, you can verify all of the identity credentials with it. And after you've established they are who they say they are and they're a real person, and you, our customers, decide to open up an account, then they can call back to us and leverage Socure's account intelligence to then verify the payment credentials. So in thinking about fraud, it's really helpful to distinguish between how a bad actor represents themselves, like identity fraud, versus synthetic fraud, whether or not they actually exist, versus first-party fraud. How are they likely to behave on that account? And then ultimately how they commit fraud, such as payment fraud. So payment fraud is really a tactic that's leveraged by all types of bad actors, including by those creating synthetic identities, but it's not unique to this fraud type.
Got it. Awesome. All right. So it looks like we've covered all of the questions that came in during the session, and that brings us to our closing time. Did either of you have closing remarks or any other comments you wanted to make before we close out?
Emma, I would just say we're very excited to extend the reach of what Socure does for our customers in terms of going from establishing the identity to moving into payment risk. And of course, we know that the goal for our end consumers is to transact in real time with great customer experiences. And so we want to enable that, and we want to enable it for everyone. We have a big mission around financial inclusivity. So the more that we can do for consumers, regardless of where they come from, to enter the financial system, we want to be able to provide that. And Socure's account intelligence is a big step along that journey. Very excited to have this in the market and thankful to everyone who joined the presentation today.
Awesome. Great. All right, that brings us to our closing time. So thank you everyone for listening and participating. We will send a follow-up email with the recording. And once the session ends, you'll see a few links on your screen to learn more about Socure Account Intelligence. Of course, we're always here. Feel free to reach out and ask any questions, or if you want to set up a meeting with one of our team members. All right, have a great day, and thank you all for joining.